Hey, what's up, everybody? Michaud once again, bringing another video. Today, I want to talk about something different. I want to talk about something that's been my field of expertise for the past 11 years, and it has to do with persons interested in owning their own home. And what I want to talk about today is building with the bank, building without the bank, or building with financing and building without financing. Now, there are a few persons, I guess the argument can go either way, and it depends on what your preference is. A lot of persons want to own their own home. Some of them are not sure whether or not they should go to the bank in order to do so. I'm trying to be as objective as possible because of my experience. So I want to just touch on each point, just the pros and the cons. And I'll start with building without the bank. So if we look at the pros, the positives of building your home, not using the bank, not using financing, just blood, sweat, tears. You go from ground up. You get no monies from anyone to say that when you're completed with the home, you owe anybody anything. So the pro, I guess, the biggest thing is pride. You get a sense of pride. Persons who build their homes without the bank, they get that, they have bragging rights. And they like to go around saying, I built my home. I didn't go to any bank. So it gives a sense of pride to be able to say, I was able to do it on my own. And I guess, it can be a good thing, make you feel good about yourself. So pride is definitely one of the things. You don't have to answer to anyone. If while you're building, one level, single story home, you decide, hey, I want to convert this to a split level, go up, a unit on one side or just take it up 2 stories. You would have to check with your town planning and what have you, but you don't have to go to the bank to get the okay, because you defected from the original plan. Also, you get full equity in the home once it's completed. The total value of the home is yours, whatever that value may be. You can take full advantage of it if you choose to sell. You get all of that monies because you don't owe anyone for it, and of course, no mortgage payments. So some very strong points. No mortgage payments. Those are just some of the pros, some of the benefits of being able to build your home without the bank. When you look at some of the cons, I look at time. I guess all of the cons work together with this. You're looking at time. How long is it going to take you to build a home? What type of home is it that you're looking to build? The cost factor. It's not so easy to save up $100,000 in 1 year to build a home for the average Bahamian. I guess when you're looking at the average income being somewhere around maybe 25,000, maybe 40,000 on the high end, or average income, not the maximum income that we earn here. But you're looking at average. You're looking between $18,000 and $40,000 is average income. It's going to take you a while to save up enough money to build a home cash. So you're looking now that it's going to take time because you're going to need time to earn the monies. You're going to have to buy material, whether it's block, whether it's lumber, wood, hardy plank, whatever it is, all of the pieces to get the home completed. And while you're building the home out of pocket, you're going to need a place to stay. So if you're going to be renting, all of that rent money, you're going to have to calculate that also because it has to be factored into time. So if it takes you 10 years to build a home, are you living 10 years rent free? Because if you are paying rent, that's also 10 years that could have been going towards your mortgage payment. And oftentimes persons don't really look at that. You have to consider also what your rental is per month. Or if you stay with family, it helps. If you are in a position where you're able to live with family and before you can get your home completed so that you don't have to get a mortgage, that is an awesome way to go. But at the same time, if you're a married person, you have a wife, you have family, how comfortable are you going to be living in someone else's home, living with your family, um, you know, and not being able, some, husband and wives, their husbands and wives argue. You have to go on drives just to argue, just to get things out of the way. You don't have that comfort. Husband and wife, hey, maybe you're newlyweds, the freedom just to walk around the home naked. I love that part of being married. I miss that part. But I'm just saying, it's just that comfort in being in your own space and not having to share while you build. So, just those are just a few of the cons of building without the bank. I'm trying to keep the video short, so let's look at some of the cons. Let's start with the cons of building with the bank. And of course, interest. You get the home, you're going to pay interest. That's the cost of doing business. Also, there's a chance that your home could be repossessed. If something would happen and you're not able to keep up with the payments, then the bank would look at foreclosure as a means of recouping whatever monies they would put out there. You have years to pay. The amount of time it's going to take you to complete the payment of the mortgage. Usually a mortgage, they look at 20, 25 years. Some persons pay it in 8 years, some in 10, some 15. You can be flexible. Some persons go up to 35 years. Sometimes it may be the smart thing to do is to go up to 35 years with a mortgage. Also, insurances. As long as you have a mortgage, you're going to have life insurance in place, and you're going to have homeowners insurance, so that if something happens to you, if the bank is able to get them the monies to pay off the loan, because the bank doesn't want to sell the house. It's going to cost them monies to do so. If they can get their monies, they would be happy. So life insurance, homeowners insurance. If a hurricane comes, we live in the Bahamas, hurricane belt. Nassau, you guys felt it for the first time in a very long time last year with Hurricane Matthew. You'll be in the Family Islands, all too familiar with it. So, insurance could be a negative because at times it could be costly. And, sometimes when persons, for some reason, they build a home without the bank, they don't get insurance. So we move on to the pros or the benefits of using the bank. And these are in no particular order, guys. I will start off with insurance. So insurance can be negative if you look at the cost of it. But, it costs, there is a cost for a reason. Insurance could be a positive. Something happens to the home. I guess you could get insurance with or without using the bank, but definitely the bank would make it more of a requirement. And sometimes we need that third party to make us more accountable than we would make our own selves accountable. So insurance, definitely the bank is going to want that, and it's going to be a benefit if something happens, an act of nature, a fire, perhaps anything is possible. You're able to recoup your losses because you are fully insured. You get to move into the home faster. The building process could take anywhere, 3 to 9 months, maybe longer depending on the size of the home. If it's a really big home, but definitely you get to move in quicker, so you can start making payments. It's going to be on your own home, so you can divert from paying rent. You can be paying the mortgage, and each time you make the payment, you have what is called equity builds up in your home because your mortgage payment goes down each month, so you have equity in the home when you do so. Also, you have the option to make extra payments to even pay the loan off even sooner, so you don't have to worry about paying for a long period of time if you get extra monies in that you would want to use to put towards getting the loan or the mortgage completed sooner. Also, pride also. Yeah, someone may brag that they didn't go to the bank to get a home, but if you own a home, you own a home. You get the bragging rights also whether your home is mortgaged or not. Because at the end of the day, you're still going to have to work hard to earn the monies, build your business to earn the monies. Whatever it is that you do, you're going to have to hustle to get the monies to pay off the loan that you would have gotten to build your home. So there's also a sense of pride there being a homeowner, especially in the Bahamas, where it's paradise. We also look at other profits as well. You look at profits. If you say, for instance, you're building for profit. If you have your own monies, if you have a lot of monies, it's going to be, you can use your own money and that would be good. But, you use your leverage. The bank allows you to use leverage. Instead of using $100,000, let's say to build a 2-bedroom house, you can use $10,000 of your $100,000 as your down payment. You borrow the difference, build a home, and then when you sell it, you just pay off what you owe, and the profit is going to be yours, and your money is safe parked somewhere. So you use your leverage, and you can do it to earn your profits. Profits again, if you're building an apartment complex, if you're building a duplex, a triplex, 2 family, 3 family, 4 family, in the Bahamas, anything up to triplex is considered residential. You get instant income. Basically, once the home is completed, you move the tenants in, you get income right away to offset what it is that you're paying. So you're living for free at, or you're very little out of pocket, or you're potentially making a profit, and very good profit even, because you're able to get the home finished, it's rented out, monies are coming in, you don't have to wait. You have to look at it. Do you want to wait 15 years to build a 2-story, 8-plex, and maybe possibly not get it completed? I know a lot of persons who are in that position. Or do you want to get it completed in 1 year's time, and you can start earning income so that over that 15-year period, you don't miss out on $465,000 of income, if you do the math. And I love to do the math. So those are just a few of the points that I wanted to bring up. Definitely this list is not exhaustive. There's a lot more pros, a lot more cons that you guys can look at. If you have any comments, you can comment below the video. You can email me again, michaud.abraham@gmail.com, if you have any questions. If you would like any help, any tips, any assistance with trying to figure out which route would be best for you. I'm here to help guys. So hopefully this video was helpful to somebody who's been contemplating whether they should go to the bank or whether they should build out of pocket. But I would say this though. 2016 and 2017, I've been seeing some unbelievable interest rates, like I've never seen ever in the Bahamas. So this is definitely the best time to look at financing if you want to get a mortgage, if you want to deal with a bank. Hands down the best time. Some places you can get in for as low as 5% if you're buying a home. If you're getting a mortgage, as little as 5% down. Meaning if it's $100,000, $5,000. If it's $200,000 that you need, $10,000. That's your 5% helps to cover it. So don't forget, guys, there's cost to everything that you do. But like I say, it's a very, very good time to look at financing for those who are. So thanks, guys, for watching. See you guys later.